Hi all, I hope you're well. If you're watching this video, it's highly likely you're contributing to or have contributed to a Midland cash value life insurance policy. If not, you're watching this video so you can learn about them. In this video, I'm specifically talking about the Midland XLCV. This is the product name, and CV stands for cash value. It was brought to my attention that many who own this policy may not remember or thus not appreciate why we chose this product, or why you should possibly own this product if you don't already. Those who have owned this policy for less than, say, 7 to 8 years may not yet see the cash value of their policy growing like they might expect. But there's good reason for that, and I'm going to address that in a few minutes. But first, let's look at the benefits this policy provides. First, you have a death benefit. And although you might be thinking, I don't need a death benefit. My kids are grown, my house is almost paid off, and I'm either approaching retirement or in retirement. But those aren't the only reasons you'd have a death benefit. If you're not going to die broke, one of the best ways to pass on your savings is through life insurance. And if you happen to die before your time, it's hard to beat the return the death benefit provides your loved ones. Now, there are other ways to access this death benefit while you're alive, like a long-term care event. If you have any health event, whereas you cannot perform 2 of the 6 activities of daily living and your primary doctor agrees, your death benefit turns into a monthly tax-free benefit for any care you might need. And take it from me, I've always been super healthy, but I've had this debilitating foot issue now for 17 months that hasn't totally improved, even after surgery. You never know when your health may start to fail. And if you have a health event, you want to be taken care of. And you don't want your family destitute by spending the lion's share of your savings on your care. So let's hope you don't die before your time or need money for care anytime soon. Great. Now what do you have? You have a totally tax-free income stream that provides 2 options on accessing this cash. One option does not cost you a dime. You can pull your money out tax-free and penalty-free. What it is essentially a no-cost loan. Remember, the way insurance companies have been able to provide such a great tax benefit for decades is that they give you your requested money in the form of a loan. If it's not distributed to you, then no 1099 is generated and no tax is due. It's genius, actually. And one of the great benefits provided by insurance companies that people don't know or overlook. So choosing this option to access your money means your money stays at the insurance company in the account that's contractually guaranteed to earn the same interest as the loan rate. Therefore, there's no cost, but it's still a loan. The money you took out is paid back at your death or before if you want to put it back in. It's your choice. Now, the second option, since the money you pull out is in the form of a tax-free cost loan, you have another choice. You can leave the money you pulled out in the variable rate strategy instead of the guaranteed fixed rate. Right now, the variable loan rate on that account is charging you 4%. But let's say you've been averaging 7%. In this example, you'd be making 3%. That means the money you pulled out is still able to earn a credit, in this case 3%. This is the genius part. If you took out $100,000 to buy a boat, that $100,000 could still be working in the strategy. Since many people aren't familiar with this, it can be confusing for some, but I can explain it further if you'd like to discuss it. Just give me a call. We can talk about any of this to clarify. Now let's talk about the fees. If you own this Midland XLCV, you might be saying, all that's well and good, but we are averaging 7%, yet our account value is still less than we put in. Yes, that is often true in the early years of this policy. As I've always said, this is not a short-term policy. It is designed for the long term or to terminate at your death. The reason why the account value doesn't grow fast at the start is because the policy isn't free. It's a bit like a mortgage. In the first 10 years, it doesn't look like you're making much progress in your mortgage or paying off much principal. But in the second 10 years, you begin to make a lot of progress in paying off principal. And in the last 30 years, you pay it off. Think about this. Would it make sense that you could deposit $20,000, $30,000, or $40,000 yearly for several years into an account and immediately get several $100,000 in life insurance and long-term care without paying something for it? If you research the cost of standalone insurance policies and long-term care policies, you'll see the fees at Midland are more than competitive for what you're getting just for the death benefit and long-term care benefit, not to mention those other benefits that I've mentioned. Again, like I said, you won't see a ton of growth in the first 10 years, but you don't expect or buy this to access cash before that time anyway. You will see the policy values really start to explode in the second 10 years, just in time for you to start taking distributions if you wish and access your money. There's one other point I'd like to make. Taxes are already slated to go up in 2026. However, the current administration has been talking about raising taxes even sooner. Why would you wait until taxes go up or until you're 70 and a half to start tax planning on your 401ks and IRAs? This account is a perfect place to distribute some of those monies as some of those monies once you get it in. You'll never pay, once you get it in the account, you'll never pay tax again if it's structured correctly. A little bit of a tongue twister there. Hopefully this gives you a better understanding of how these policies work. But if you'd like to know about your specific fees and costs if you own it on your policy, reach out to me and I can request an in-force illustration and we can go over them. If you don't own one, we could also do the same. Thanks for listening.